Today is Wednesday, July 11th, and you're looking at a daily chart of the Nasdaq, which just continues its torrid romp higher. It's on a real strong power trend right now, and today was up 218 points or 1.18% and closed at 18,647, 18,647. You can see that nice trend, and even though the index is going up, it's not that easy to make money in this market. If you're in the wrong stocks, you're going to get punished and hammered. In this tape, you have to be in the right stocks. It's still a stock picker's market because there's a lot of rotation going on. This is an all-time high close for the index, and it closed right, near its high, 647. The high was 655. So just 8 points off of its high there. Fantastic day for the Nasdaq. And if you want to go to the S&P 500 index, another, all-time high closing here, 5,633. And once again, that had a close near the high, 635. The high 633, the close. So very strong moves in the S&P and the Nasdaq. And so what's driving this? Well, of course, Apple, right? Apple's one of the big kahunas, 3.5 trillion market cap, and this thing just appears to want higher prices. I've got to go to the weekly on this one because it's a large stock, not a real fast move. You can see the base on base pattern and just the trend higher. It's just trending higher. It's very, very difficult to buy these things when they're doing this. You have to already be in them because, you don't want to buy and have them pull back. But if you want to own Apple, you have to take a swing at it somewhere. And so 230, 232 is maybe the place to do it. And if it comes back a little bit, you add some more scale in because these things are, gosh, on a real roll. I'm really surprised how strong Apple has been, that I shouldn't be, because I'm always saying that you can never be surprised at how high a market or a stock can go, and you can never be surprised how low it'll go, because it's going to surprise on the upside and the downside. This is Microsoft. So pull back to its 10 on Monday and Tuesday, and then bounced off the 10 today, closed at 97% of its daily range. That's a nice hammer candle off the 10. Did not make a new high though. That was last Friday at 468. Got up to 466 today. So, Microsoft's just grinding higher lows, higher highs. Is the definition of an uptrend. This is one that did make a new high today. Google, along with, I believe it was Apple, they both made new highs today. Yes, nice 97 hammer candles on these things. That doesn't mean it's going to go up tomorrow. It certainly could, the way this is trending. But you see Google here, they're getting extended away from their moving average. So a nice pullback, a day or two pullback. It didn't come down to its 10 or anything, but just a nice pullback to allow the moving averages to catch up. And that's not even a pullback, that's just going sideways. So Google, very strong. Amazon and Meta are the two that I think are most, close to buy points. This is Amazon, and it's going to have trouble at that 200 until it doesn't. That's a key psychological level there at 200 for Amazon, providing some decent resistance here. I think the first time it hit 200 was 199.84 on June 27th. Okay, there it is, July 2. So it's only been a few days, but eventually it's going to break through there at some point, right? Meta. Yeah, this is another one that I think, close enough to a buy point. It's not too extended. Had one day where it pulled back, kind of went sideways. Today had another strong day today. 60% of its daily range. Meta looks good to me. All these look good to me. And then there's Tesla, which is just on a rampage. I don't know how many days in a row this thing's been up, about 10 or 12, something like that. Somewhere in between there, probably 11. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, 11, of course. So anyway, it's got the one little David Ryan ant here, so that's where it trades what, I don't know, 12 out of 15 days or 13 out of 15 days with increased volume. So Tesla's looking super strong. And then the last one of this Magnificent Seven, which is driving these indexes higher, is NVIDIA up 135 after hours. I like it. Taiwan Semiconductor came out with raised guidance today and just drove the semiconductors higher. It's a Taiwan Semi. I mean, NVIDIA doesn't need help, but they do a lot of business with Taiwan Semi, so they're interconnected. So if Taiwan's going to report, good earnings, NVIDIA is going to go up with it. If you just take a look back at what this thing has done, it broke out of a base, made a new high, pulled back to the 21, found support, and now it's challenging that old high at 147.78 or 76. Yeah, 140.76. And it's probably going to get there, eventually. The way it's going could be tomorrow. But yeah, after that stock split, just it's really been strong. So speaking of stock splits, I've got to go to Broadcom, which splits tomorrow. 10 for 1, so it'll be about $174 tomorrow, 175. 10 for 1, so we'll see how it plays out. I showed Chipotle and how it struggled, but that was 50 to 1. NVIDIA had a 10 for 1 and didn't seem to harm it too much. Broadcom just had this breakout and the pullback to the 21, found support, and now it just looks like it wants to trend higher. Let's see tomorrow and the rest of this week and next week how it handles the 10 for 1 stock split. All right, AMD, they bought a company, Silo AI. It's a European company. They claim to be the largest AI lab in Europe. Wall Street liked it. It was up $6.86 to 183.96. Nearly a 4% move. Usually when you acquire a company, you get knocked down a little bit because you're spending money, but this is only a $650 million deal, and Wall Street liked it. And I'll just say, if you take a look at AMD, take a look at this chart and all this consolidation. This is, looks to me like stealth accumulation there. They can't push it any lower. So if it can't go lower, it's got to go higher. And now you take a look at this chart with Tesla, and it had a little longer period of, stealth accumulation, but it couldn't push it lower. So what does it do? It goes higher. So yeah, I like AMD. I believe it's going back to the 200 level. They have earnings on July 30th, and they better be good this time. None of this 2% growth. We need double-digit growth, and we need AI to start, being a bigger factor in their balance sheet. They need more growth. This is not cutting it. The 2% growth here. So anyway, that's it for AMD. I have so many semiconductor names to get to. And somebody asked about Intel. And Intel, to me, looks like it's carving out a bottom. I just showed you the Tesla and AMD charts where they just can't push it any lower. The 29.73, we just call it the $30 level. Couldn't push it any lower. Now it's back up, 35 area. So to me, that looks like a bottoming pattern. And Intel, to me, has bottomed. And I'm not saying it's going to ramp right up. They're going to report earnings on July 25th. I don't like stocks that are, showing weakness like this. But if you look at the weekly chart and you look at this earnings line, and I always say stocks typically follow the earnings line. Earnings line ticked up, had a couple of quarters heading north, stock bottom, now it's heading north. So yeah, I kind of like it, Intel, but we'll see how it goes. I mean, I like buying leaders. So if I'm going to own a semiconductor stock, I want to own NVIDIA. Just like I won't own a drug stock, I'm going to own Eli Lilly or Novo Nordisk, but that's beside the point. Anyway, I took a look at Intel. Yeah, I mean, I think it's bottom. If you want to take a swing at that one, I think that's a legitimate bottom there. They do have earnings coming up though, so you got to be careful. I did mention semiconductor, Taiwan Semiconductor, and they did report and raise guidance. They didn't report earnings. They just raised guidance. Yeah, the preliminary. Their earnings are July 18th. So they'll probably come out and crush it. Anyway, so this one was higher, 3.5% today, and it just drives everything higher in the semiconductor area. This is ACLS, and to me, again, bottoming pattern, right? The 145.77 got above it there at 145.25, which is not higher than 77, but you get my point. It's like it's formed this little stage one base, right? And now it's starting to break out of it. So we like that, don't we? Yeah, anything above 145. Now it's a 155. Geez, it's really moved this week. I was watching it earlier and I thought, I'm gonna let it, build a little bit, but man, it's up 10% this week. So I've made a lot of mistakes this week in my stock picking. Anyway, I'm not gonna beat myself up. ARM, this is one that we did have on the ready list last week, and it broke out, just wants higher prices. ARM, you can see the breakout there, your consolidation, your buy point, and you can see their earnings has been, just straight up rocket ship. So the stock is up nearly 3% this week, following up on a move last week, which was I think it was double-digit move last week. It was 10, almost 11%. So ARM looks fantastic. If you're in it, congratulations. It looks really good. SGH, which is a Smart Global Holdings. This is a computer data storage group. Mixing up my groups here, but anyway, just want to point out that it broke out on earnings last night, and boy, man, nice move, 26%. Speaking of earnings, stocks moving on earnings. AEHR, this is a really tiny, 445 million market cap stock. But it broke out 24% following earnings last night. The earnings weren't great, but Wall Street liked it. Must have not have been expecting much. So anyway, UCTT, another semiconductor equipment stock. Man, this thing's making new highs every day. Trend trader's dream. I mean, if you got it at the 50, it's up, like Tesla, like 12 days in a row, just making new highs every darn day. KLAC. Has used to be KLA 10 core, is another semiconductor equipment stock, and it broke out and ran up to a new high of 876.55, pulled back to the 21, found support. And we're seeing a lot of that. Stocks pulling back to moving average and finding support, catching themselves in the downdrift, and then ripping higher. And then Applied Material. This is the last one, I promise, of the semiconductor stocks, making a new high. Once again, it broke out of a base, made a new high there at 249.42, pulled back to the 21, found support, and just trending higher. That's what you find in uptrends, right? Pullbacks are to be embraced. Every time they pull back, they find support and they move higher, find support, move higher. So yeah, I mean, the market's in an uptrend, but I'm going to get to some stocks that aren't doing quite so well here in a minute. So don't just think you can buy anything and you're going to be good to go. VKTX, the weight loss drugs are back in vogue, I guess you could say. I don't think they ever went out, but this one made a low there at 46.11. This looks like it kind of just forming a bottom here. And yeah, now it's starting to trade higher. Something's going on there. A 7% move. I think it's up 13% this week. VKTX looks phenomenal. Eli Lilly, this is the leader of the drug stocks. How do I know? Well, I mean, look at how far above its 10 EMA it is. Yeah, just making new highs, So yeah, that thing looks fantastic. And then Novo Nordisk, this one's getting hammered by Biden and Sanders and Dr. No. They're playing the long game, though. They want to be the manufacturing champs, and because Lilly and Novo, and when more of these weight loss drugs come to market, they're going to need manufacturing, so they want to dominate manufacturing. So they need the Catalent deal to go through, and Dr. No is just dragging her feet and asking for more information from Novo. So I think Novo will be well. I'm not going to say anything. They just want to close the Catalent deal, and the FTC is dragging their feet. But anyway, I just wanted to point out one thing. Somebody asked me, "Are you you know, are you an investor? Are you a trader? And I'm both, you know, because I think you can own stocks over time. And like when somebody pointed out to me, like, oh, Eli Lilly's up, you know, over the last year, you know, whatever that is, 19 and 26% more than Novo. That's great. But time frames are everything. And if you bought Novo when I did, thanks to my financial advisor, Casey, I think he's retired now, but he got me into Novo in 99 when he said China was going to be obese and they're going to need these diabetes drugs. And, you know, so you know, you can hold some stocks you can hold for a long time. I mean, you could build fortunes with some of these names like NVDA. I mean, this has been a monster for how long? It dwarfs NVO dwarfs Eli Lilly, and Monster Beverage. You know, this has been a winner for a long time. Deckers, one of the leading stocks of all time. So, um, if you buy those, you can hold them. But you know, I only bought Novo. I bought stuff like Waste Management that I've had for a long time. Bristol Myers hasn't done anything, but it does pay a dividend. Look, over 20 years, it's down 17%, 24 years, excuse me. And Target was one just because the, you know, dividend aristocrats like RPM, probably never even heard of that one, but you know, they pay a dividend. So in my retirement account, I have these stocks that are just you know, I've held forever, and I'll bequeath them to family and friends, so, and charities. So that's just one account. When I retired, I broke my accounts into, you know, many accounts, and this is my retirement account where I hold these. But I do have trading accounts and then an IRA where you don't have to pay taxes. So I trade in that account because I want to supercharge, because I don't like paying Uncle Sam. You know, a dividend is taxed at 15%. But just wanted to show that there are some stocks like Amazon and Apple, and you know, that you could buy and hold. But a lot of them you can't. They have these stages where they, you know, like a Roku, which is a stock that I own. I'm going off base here, but that's okay. I just want to make a point. No, man, I got to go to a monthly. So if you own Roku, you know, it's got the Weinstein 4 stages, right? You got stage 1 where it goes flat, stage 2 where it appreciates, stage 3 where it, you know, tops, and then stage 4 where it declines. And now where is it? Back in the stage 1. And that's Weinstein's 4 stages. So when I refer to stages, I'm referring more to you know, the IBD, that each stage as it goes higher. If I can get a stock here that's been trading higher, it's just on Novo, so that one's been trading higher, and so it has a base. You see how it's a late stage base. It goes from a base 2, a third stage base, and now this is a 4 stage. But when they undercut a prior base, they start a new base, even though they're still in an incline. And I don't know. I'll find a stock that has done that. I believe Lantheus. This is one that, yeah, so this is a stage 1 base. And even though it's ripped higher forever and ever, but this base undercut the prior base. So that, yeah, that's stage 1. This one undercut that one. So it'd be a stage 1 anyway, even though this is late stage, and then it fell out of bed here. So this base undercut the prior base right here. This is a stage 4 base, and it undercut this base. This base undercut the prior base. So it starts a new base count. So this is considered a stage 1 base, even though it's still in, you know, an uptrend. Lantheus had news today, and I forget the news, darn it. Oh, well, if you have access, gosh, what was it? It must have been something to do with earnings. Oh my gosh. Oh well, I'm losing it. Anyway, it was up 36%. So you know, when a stock moves like that, it's not to be ignored. Um, and also you see this like stealth accumulation, these ones that go up and they just trade sideways, and oops, you know, the institutions come back and start buying again. I forget the news on Lantheus. Oh well. I'm just gonna have to live with it, right? Lantheus did have news. But that's the type of move that you do not want to ignore. And, you know, this is kind of like I've showed you several other stocks, and I'm going to show you more that are like that. And they, you know, they pull back. See this little pullback to moving average? It even undercut the 50 before it slammed higher. So you don't give up on them just because they, you know, slice through 50 for one day. So give them some time. Give them some time. Okay. Another one is HIMS. HIMSS is a stock in this, medical drug group. It broke out of a base, made a high, pulled back. Now it hasn't bounced yet at all. So this one's kind of squatting underneath its 21. Not bad. TMDX is another one I like in the medical products group. This one's traded sideways and it came back to the 50 today. And I don't know if that's going to be a gift or not. I kind of think so. But only time will tell. And you can see if I get on track price here. Where the 50 was today, 137.06, and then the low was 137.33. So for all intents and purposes, pull back to the 50. So even like I say, even if it undercuts it and it hangs out there for a day or two, I wouldn't give up on it. Not in this tape. All right. EBS, this is one that I was going to put on my ready list this week and I didn't. And all it does is go up every day. Six something percent today. It's up 17% this week. I'm sick to my stomach. I didn't buy it. I didn't put it on my list or anything like that. ADMA, if I could type properly, is one that I did buy, and it's doing okay. Not like EBS though, but can't kiss all the babies. I can't cry about 4% move this week. And so ADMA, I've just listened to their conference call, and I really like what they had to say and their raised guidance, and it looks fantastic. TGTX is another one that I like. To me, this one's it's incubating in a base. I had the buy point. I think it was it 1841 or 1902, doesn't matter. Eventually, it's going to take out that 2267. You can see it's building the right side of this base. The moving averages, shorter term moving averages, are all trending higher. They're stacked, the 10, the 21, the 50, all trading above the 200. So, and now you can see the pattern rec is picking this up here with this base. And I got to go to the weekly. Sorry about toggling back and forth here. Yeah, you can really see this pronounced on the weekly chart here. Earnings line heading north. Stock is going to be heading north. To me, this is just a question of time. It's not if, it's when. And 20% off its 52-week high. I think that's well within this thing's reach. TGTX, yeah, the multiple sclerosis drug is just doing fantastic. And the last one in the drug space, all I've done now is semiconductors and drugs. You know which stocks I'm liking these days. Vertex made a new high today. Once again, broke out of a base, made a new high, pulled back, to its 21. The 21 is a rising 21. And you just got to be patient, and then it popped higher. And now it's been up like the last 6 out of 7 days or something. And, if you just give up on these things, you get stopped out or whatever, you move on to something else and you miss the move. Okay. Anyway, I got to get to there's some punishment going on here, and I don't really know why. I think it's because of the Nike earnings report, but Wall Street is selling these stocks here. This is Deckers. It was down like $100 today. And when I looked at it, I went, what the heck is going on? Deckers has done nothing different. The business has not changed. They're still taking market share. Yeah, this thing was down to 851 today. Wow. So it closed up 40 something points above. So it was down, yeah, nearly 90 points today. My goodness. Wow. Yeah, it undercut its 50 big time, right? And I took it off our leading stock list because it did that. It's been squatting there for a few days. But this move today is just out of nowhere. I mean, it's only like a 5% move, but I gotta believe that the Nike and Lululemon's earnings report has something to do with it. Well, Wall Street is definitely rotating out of this shoe group, which was a top 5 group, and now it's down to 16. It's going down 3 or 4 points every day now. But you can't blame it all on Nike. I mean, they're selling this stock for a reason. It went into the S&P, and it's been a downer, a bummer ever since. Man, I gotta believe when they report earnings on the 25th, though, they're going to crush it again, and it will gain traction and rally right back through that 50. I believe. I don't think anything's changed with Deckers. Their business is still fantastic. They're still taking market share, but my goodness, Wall Street is just selling these things. This is On Holdings. Again, sliced to 50, hovered below it, it sliced it, hovered below it for a little bit, and then traded up to it and got rejected. So that looks pretty bad too. Crocs, another one in the shoe group, sliced to 50. Oh boy, tried to trade back on what is this, Monday, Tuesday, and now Wednesday just fell out of bed. So, man, that's rough. The first pullback to the 50, you kind of expect a bounce, but this one didn't. So, like I said, there's no absolute rules, on Wall Street except for to protect your assets. And to me, I mean, that's one of the stocks that if you're in, you got to get rid of it because it's opportunity cost. If you're hanging on here hoping that it's coming back, and you could be in something like NVIDIA or Google, I mean, making new highs. Why would you want to be in Crocs? It's just heading down. So. That's to me, but everybody's got their own time frames. You're holding Crocs for 5 years. Yeah, it's probably going to be higher in 2 or 3 or 5 years. But for now, if you're a trader, that's the difference between, being a trader and holding on for long term. At my age, I'm not going to hold anything for long term except for that stuff in my retirement account. But and the other accounts, I just trade in and out. So I do both. Just wanted to make that clear. And I got to blame this all on Nike. Their earnings report was just horrible. They haven't had growth forever and a day. And you can see the Wall Street response. It's just keeps selling off. Man, the market cap now is what, 109 billion. This thing was almost 200 billion not too long ago. All right. Anyway, Phil Knight's buying himself a football team, so he's got to be happy about that. Another retail name, Elf Beauty, one that I like. Man, I'm telling you, this thing's going to shake you out. When you know a stock, you know its character, then you're not surprised when this happens. I mean, it consistently does this. And today was no different. It closed below 199. Just right at its 21. Not a big deal. This is kind of expected behavior, even though the market was up today big. This thing's going to march to the beat of its own drum. Still, making higher lows, but just darn, you want to see it bounce off that 21, either Thursday or Friday. It should do it pretty soon, but you got to look at the bigger picture here with Elf. This is just a big consolidation pattern. And now you're looking at this handle here. This is the second week here of forming a handle. And today it undercut last week's low. Yeah, 196. Last week was 197. So you don't like to see stocks undercutting their lows, but when it's making a handle, you're just going to have to be patient. This is art, not a science. And so you have to really know the character of the stock. And this thing's going to shake people out. And speaking of shaking people out, I've got to go to the restaurant stocks. CAVA pulled back to its 50, and these things are just looking bad. I'm just going to go through them quickly because it's just too negative for me. Wingstop, you just to me, you got to sell this stuff. I own Bros. Yeah, I had to sell it, even though this one's stronger. It just sliced its 21, but there's just too many other stocks, and they're rotating out of this group. And why fight the trend? Sweet Green was one that did it first, right? Sliced its 50, and now it's just selling off every day. I mean, it really is a short. I mean, if I'm not looking to short in a market like this, but man, there's some of these are just too easy, man. They're just selling off every darn day. And KRUS, which is KRUS Sushi, they reported pretty weak earnings. Same store sales were lower, margins lower, and they're just the stock's going lower. I mean, what can you say, man? 16%. Wow. Down 17% this week, 60% off of its 52-week high. Woo. Tough hold there. So anyway, that's it for the restaurant. That's just too negative. I can't handle the shoes of the restaurants right now. They're just killing the drill. And like I said, it's opportunity cost. You just get out of there and get into a trending stock because that's the way the market's running these days. The automobile stocks, Rivian obviously made a bottom here. It looks like, some other stocks that we looked at earlier, like Intel. And this one though has ripped through its 200 here. And this one's really looking strong. You could actually say that 1684 there is a point of interest. If it gets above there, yeah, Rivian looks pretty good there. As you can consider that like a stage one base, right? Yeah, break out of that Darvis box, baby. It already broke out of this one. So, yeah, Rivian looks pretty darn good. All right, race, which is Ferrari. I guess people have money to buy Ferraris, and this one's just consolidating in the base. I did contemplate putting this one on this week, but it's still in a base, and of course it's up 3%, but it's still in a base. You can see the buy point there is about 442 standard buy point, but yeah, just consolidating. I was going to put it on there at 429, but I didn't. It's no big deal. It's not going to race away from us. But this thing is in first gear, and when it gets into second gear, we're going to want to be in on that thing because it's shown the ability to move. Once again, this stock really moves. Once it gets into gear, it really moves. So yeah, we want to participate in this, and we don't want to hold through all this messy up and down. Can't decide what I want to do. We want this, not this. Okay. Sideways is no good, especially if you're in options, because the decay just kills you. So you need stocks moving higher. Speaking of which, Carvana, which I did put on the ready list this week, obviously it's in this base, but hasn't really broken out yet for me. I mean, if you look at today's action, I thought it was going to break out today. It's a 5-minute chart, opened up, really soared higher, but it gave you the old okey doke, right? It was 1:36 in the morning, 25 minutes in, and then an hour later or even less, 1:26. So it lost 10 points in 45 minutes, but it recovered, made a low. See, it's showing you its daily range, right? And that's what a lot of stocks will do. They'll show you the high, they'll show you the low, and they're just going to trade in between all day. And I mean, if you own options, you could buy on these lows, and then sell when it hits a high. But that's day trading, and I'm too old for that. I'd rather go out and golf or swim or whatever. Go to the gym. I'm not going to sit there and look at the screen and worry about daily or weekly options. Anyway, that's just me. But you can take advantage of that. All right, I got to get to these more bummer stocks now. CrowdStrike looked to me like it was stop hunting today because of people who let's just say you didn't own this stock, you didn't want it, then on earnings you bought it. The earnings jump. I believe, I don't know, was that the earnings jump or this was it right here? I believe that was it. Up 7%. Anyway, let's just say you bought it there on that day. It was between 367 and 384. So let's just say you got it at 370. Okay. And it's just formed this shelf the whole time. What day was that? June 10th. So it's been a month. So it's just a month of sideways. You got it at 370. You're happy. It's not doing anything wrong. And today it takes out your stop, right? Because it slices the 21. And you don't want to hold a stock that's going into gap land. The low of that day was the low of the breakout day was 367.10. So you don't want it going below that because it's probably going to go fill that gap at 349. And you don't want to hold the stock from 370 to 349. You're going the wrong way. It's working against you. So what often happens, just observing from years of observing this junk, they take out your stops. They take everybody out. Everybody who bought on June 10th or afterwards got stopped out today, probably, because you can't afford to let it go down to 349. Like I said, so it wouldn't surprise me. It wouldn't surprise me if it traded down to that 349, but also wouldn't surprise me if it just bounced off that 21 and took out 400. I'm talking soon, like within the next few sessions. I've seen this so many times. They take out your stops, then they rip higher. Yeah, but it could go either way. I mean, but to me, it didn't. I sold it today because I don't want it going down here either. But I'll buy it back, and I'll buy a little more than what I had before if it starts to bounce and trade through that 394 and looks like it's going to go through 400. So it's a stock that I want to own. It's a stock that I like. It's just it's messing with investors right now, messing with traders for sure. But you know, a lot of them look terrible in the software group. I don't know what's going on in software. Palo Alto held its own today, much better than CrowdStrike. How do I know? Well, because it's above its moving average there. It's still above its 10. So yeah, with CrowdStrike selling off, that one looked good. Spotify was downgraded today. You would think CrowdStrike was, what Spotify was, held up pretty well. It's only down 2%. Traded down to its 50, which was what, 306, and closed below its 50 there. Closed near the low of its day. Wow. So it didn't handle the downgrade that well, but only 2% is not bad on a downgrade. Oftentimes you'll see 5% or more. And that's the whole point of a downgrade. Usually is you can get stocks cheaper prices. Snowflake, look bad. Another stock that looks like a short is it takes forever to rally up to its 50, then gets rejected and then trades lower. But I'm not looking to short any stocks in this market. It's too strong. Elastic, this one was up 2.6% today. So software hit and miss, you know, a lot of them getting punished and some are doing well. Palantir is another one that's doing well, one that I was going to put on my ready list this week again, but I can't have 40 or 50 stocks on a ready list. I want to start with like 10 or 12 and then expand during the week, maybe up to, 15 or 20. Palantir is a stock that I don't like though, because of the massive surplus. So, yeah, it might be the Messi of AI, but it's going to go higher without me. I just, I don't know. Palantir bugs me. The management's just too darn greedy coming to market with that many shares. I mean, they can't even never split. I mean, they would have like a gazillion shares. So anyway, if you look at the weekly, you can see the IPO base. They came to market right before the bear market, which you could see here. And then they've rallied pretty nicely, but it's got a long way to go to become a $45 stock again. Anyway, Palantir looked pretty good. And then Datadog, this one trades like a chihuahua sometimes, but we want it to be a pit bull. Pull back to its 21 today. Let's see if it finds support there. The 125.44 is an area of interest. The 21 EMA is today it was 124.76, so that's a rising 21. It'll be higher tomorrow. All right. Now every morning I put the digital currency markets, and I put the commodities, and the commodities, I don't know how many people correlate the commodity with the actual stocks, and usually when the commodity's up, the stock will go up. Well, today copper was up, and so Southern Copper traded higher, 1-something%. Big deal. Gold, silver, they were up today. This is Kamiko. This is up nearly 10% today. Nice move. I believe they had news out of Kazakhstan breaking above a downtrend line here. So that's a real powerful move through its moving averages. That looks fantastic. So let's see what that does in the next couple of sessions. Ego, which is a gold stock, yeah, that thing's looking good too. Just consolidating in a base. So that's why I put the commodities on my morning report, so you kind of know which direction these are going. And these had a big run. This is AEM, another Canadian gold play. You can see this big run, 44 to 71. This is showing the ability to really move. And now what does it do? It just consolidates in this little base. This is a cup, but no handle. And this thing just wants to go. So yeah, the buy point 71.50. It's still, actionable. I don't like chasing stocks when they're too far away from their moving averages, though, man. To me, it feels like a chase here at 6.6 above the 10. So I'm going to let that one go without me. All right. Couple more stocks. Obviously, this is a long video. There's a lot to cover. There's a lot going on. There's a lot going well. There's a lot not going well, though. This is CLS 6106, we'll call it. It's just a tick above that. And nice day today. It's not that extended from its moving average. I know it had a nice day today with 5% above the 10. Like to get it closer to that moving average so we could come back near 60 the next couple sessions. That's definitely one to watch. It's in this group is doing much better. It's at 22 now. It's been coming up. This is FN VRTX, and you can see this little shelf type pattern here. Once again, we've seen a lot of this recently as the moving averages are converging. The 10 and the 21 are just hanging out next to each other there, which is an indication of tight trading. How many weeks tight has this been? Quite a few here. Yeah, quite a few as it just consolidates. FN looks pretty good. And the last one in this group is Flex. This group, yeah, broke out, made a high, pulled back, now undercut the 50. So that doesn't look too good. How about Sanmina, my friend Yuri? This is just consolidating. It's been consolidating for a long time. These are cyclical businesses. You can see the cup shape pattern, the consolidation, just, man, what is it, 28 weeks and 16 weeks. And when you're looking at a year of just going sideways, I can't stand stocks that move like that. All right, I have to get to MU because I showed you CROS. It broke out, made a new high, then pulled back to the 50, and then crashed below it. And this one bounced. So, nice little bounce there. It was what, 126 on the July the 1st, 127, and now it's at 136. So a nice $10 bounce for MU. But the leader of this group is no doubt NetApp. Man, this thing is just strong, as strong could be. Just, making new highs, surfing the 10 EMA. That one looks fantastic. And then Pure Storage, Charlie's company. Wow, yeah, broke out, double bottom base, made a new high at 70.41, pulled back to the 50, found support and bounced above its moving average. So that's textbook action in Pure Storage. Anyway, that's it for me today. Except for I lie in honor of the great Steve Jobs. I still have one more thing. I have to include these data center plays because they're starting to look better. I mean, every stock needs to form a base at some point. This thing went from October to June, right? So you're looking at what, 8 months, and now it's finally consolidating in a base for the last, I don't know, 8 weeks or so. What is this? 7 weeks? Okay, so Vertiv Holdings consolidating in a base for 7 weeks. Kind of broke above this downtrending line here on what day was that? Last Friday, and now it's just kind of sideways this week, even though it's been up every day. It's up 2.5%, but to me, I'd like to see it get above that 50, which I believe is around 94.50. Today it was 94.33. So yeah, get above that 50. I like this stock here, and I wouldn't wait for 109 at all. So I'm going to put this on our watch list, our ready list. Essentially, I think this is going to be a double bottom base because it made this bottom, then rallied up, then made another lower bottom, and now it's starting to build the right side of this base. So I kind of want to get in early. I like this stock. I think 7 weeks, next week will be 8 weeks. There's plenty of time for base building. They have earnings on July 31st. So I just wanted to mention that SMCI is another one that, broke out of this base here in, I believe it was January. Man, it really roared from what, 375 was a breakout, or 357, I believe. But it was even lower than that. It was in the twos, 280 to 1299. That's a hell of a move in a short period of time. So now it forms a base. And to me, it's above its moving averages. The 10, the 21, and the 50 are trending, in the right direction. You can see the RS line here trading up through the moving averages there. So keep an eye on this one. I like it, above 900. I like it above 972, and I would even love it above 1014. Anyway, the last one I have to show is Dell, another one that I kind of like. It sold off following its earnings report, supported by the 50, right? Rallied up, supported by the 50 again, and it's just trending higher. The moving averages are trending higher, the stock's trending higher. So this one looks good to me as well. Anyway, that is it for me today. Sorry for the long video. I just had to show you some of the hits and misses. It's a landmine out there. If you pick the right stocks, you can do really well. If you don't, you can really suffer, as I showed you in some of those names. And if you just are not confident and just want to own the index, you can buy the TQQQ, which is up another 3% today. You can see it's trending in the right direction. And over time, the Nasdaq's going to go higher, right? I mean, that's what it does, right? I got to go to the QQQs because it has a longer, there's your bear market, 4 bear markets this century. Every time it trades higher though, doesn't it? There's your COVID bear market and there's your Fed induced bear market, and then it trades higher. Why do the indexes trade higher? Well, because higher earnings over time. The companies are earning, much greater earnings than they were 10 years ago, even 5 years ago. You can see in the NVDA how their earnings are just going higher, and it's reflected in the stock. You're going from 13 million up to 26 million. They doubled, and triple digit earnings growth. I'm cherry picking here with NVIDIA, but when you see these large companies with these earnings growth, that's why the indexes grow. So anyway, if you're not confident and you're not having success, you can always buy an index fund and just take advantage of the uptrend that way. If you're getting hammered in some stocks and they're not working for you, that's always an option. Anyway, that's it for me. Once again, thank you for watching at mcstockcharts.com. We never give up.